We're coming near to the end of tapering in the US. This chart shows you the very clear, seemingly clear correlation between Fed balance sheet expansion and the S&P 500. So the nearer we come to the end of tapering, the bigger the risk that the stock market corrects. In my view, if there's going to be trouble in financial markets with the end of tapering monetary tightening perceptions, there's going to be trouble in financial markets. It's going to be caused by a rising credit spreads. If credit spreads do not rise, there won't be a problem. However, I'm saying you should overweight Asia if, like me, you're willing to make a huge overweight bet on India. This year, by far my favorite market in Asia has been India and remains so, most particularly since the election. So I'll discuss my portfolios. I've got a big overweight in India in my relative return index. I've got 16% against a 6.7% benchmark. But in my long-only portfolio of about 25 stocks, I have more money in India. I have 41% of that portfolio in India. Now, India's already done very well, so it wouldn't surprise me if there's a consolidation. But because I was lucky enough to have the money invested already, I'm not going to pull out because I'm viewing India as a 5-year story, given the fact that Mr. Modi's been elected for 5 years. Modi's the most pro-business, pro-investment political leader in the world today. So the likelihood is he gets an investment cycle going again. The bad news on China is cyclically we're slowing, the property market's correcting. The good news is more long-term. The government seems serious about SOE reform, which will be a long-term positive, and the anti-corruption campaign continues, which is a short-term negative for growth, but again, a long-term positive.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.